Okay, everybody. Here we go. It looks like we are live Wednesday. What is today? Wednesday. Duh. August 23rd, 2023. I think I deserve a duh for that one, even though I said it. All right. Are you waiting for NVIDIA? Oh, everyone's waiting for NVIDIA. Look, this whole AI thing, I think, has gotten way, way, way out of control here. Uh, I guess we're gonna have to see how that. I'm not saying that their earnings aren't going to come in, whatever they are. I don't know. They're not out yet. As I am doing this, they should be out pretty soon. But it looks like you turn on CNBC and Fox Business. It's all about Nvidia. The whole world's about Nvidia. Yeah, you can't make it up. But that, again, look at Nvidia. Forget about everything else that's going on. Forget about the fact that manufacturing here in the United States continues to free fall. The service sector, the flash PMI, manufacturing services flash PMI. I'm just so surprised here. It's not doing very well. Came in lower than expected. Retail sales is falling off of a cliff yet again. The consumer is maxed out. Ted Nugent's tank school car. You love the Far Beyond the Sun reference, exactly. Malmsteen, what a guitar player. Lava Nugent's here. Perry's here. Lord Humongous, I know he's here today. Where's Magic Mika? Is she not here today? Geo Rider, The Resistance, everyone. Goldstein's here. Goldstein La Gargoyle. She's awesome. Anyway, so yes, this whole thing is about focus on the minutia, and this is NVIDIA. This whole thing here. I'm watching the screen over there, but anyway, like I said, this whole AI thing is out of control, and that's whatever it might be. So let's just we're gonna have some fun, you and me. We always have fun, I think. So let's look at this market. So today we had a little bounce. We had a bounce in this market. Dow, S&P 500, NASDAQ, especially the NASDAQ, I guess on speculation of what NVIDIA is going to do or may not do, on the back of a very profound event. The 10-year yield dropped substantially in the last 2 days. We were like 4.32, like 4.18 or so. That's a substantial drop. The US dollar goes from being positive on a relative strength basis to going in the negative, and the market got off on that. Oh yeah, let's do it. Look, we'll see where this goes. Honestly, it's insane, but risk in this market has come down. I wonder who's buying here. Who did we think who have we said has got to do one of three lovely things? One, buy more debt. Who's buying the debt? Okay, pushing the 10-year yield down substantially. Well, it's got to be the Fed. Who's weakening the dollar? Got to be the Fed. Who's probably propping up this market at the same time buying large cap stocks? Oh, it's probably the Fed too, because it ain't me and it ain't you. Honestly, it's too crazy. But on the economic front, I mean, it's pretty unbelievable. Again, there's no connection between the market and any kind of reality and the economy. Economy is just it's so bad. It's so dire around the world. Europe, here, United States, everywhere. And again, manufacturing falling off of a cliff. Oh, who would have guessed that one? Retail sales. Oh, you mean the consumer isn't done yet? Yeah, they're completely done. And of course, like I said, the MMRI dropped. The illusion of the market. I've been telling you this, and I've been repeating this over and over again. The illusion of the markets will be maintained, at least in my opinion, during the selection cycle of the next president. They've already chosen who it is. Believe me, we have no say so. If our votes mattered, we wouldn't be allowed to vote. I think that's pretty evident. Crude oil. Let me touch on crude oil before I talk about a few other things. Looks to me, it's playing out exactly as we expected it to do. All right. Bounce off 67 all the way to 84. We're getting a retest, it appears to me. Again, there's a lot of people who follow crude oil, who trade crude oil commodities. It's the place to be as far as I am concerned. I think most of you would have to agree with me on that deal. Okay, so we got what appears to be a pullback here. I think it appears to me as that crude oil has a little further to go. Now, look, I am not in the business of picking tops and or bottoms, but looking at the charts, considering what's going on here, a little bit more of a drop in crude, and then we hold would be an amazing entry point here. for my crude oil bulls out here. So, and again, what does that mean? The price of everything is going up as well, and it's going to continue to around the world as central banks fulfill their end game, as central banks continue to inflate. Exactly, illusion or delusion. Greg S., you nailed it down. The illusion of the market is a delusion, but people are locked into this kind of a delusional state, and they can't snap out of it, whatever it might be. But that's just the way it is, unfortunately. Let's see. So, did you look at cryptocurrencies today? Nice, getting a bit higher across the board. Gold, especially silver, very nice run higher today as well. Okay, but personally, and I think most of you here would again agree with me, we're not looking for this stuff to. I personally, and I think most of you would agree. Why are we holding gold and silver? Why are we holding cryptocurrencies? Not because we're expecting it to go higher today, tomorrow, even next week, or maybe not even next year. Okay, we understand that at one point debt market hyperbubble is going to implode. Cash is going to bleed out of the stock market, and it's going to move. Cash is going to move into commodities in the biggest way you can possibly imagine, and then some, and also I believe into cryptocurrencies as well. Period. That's my take on it. You are certainly allowed to have yours. Now, I want to cover something else real quick. There are a few dynamics coming together. They're all converging at the same time. It's an incredible thing. The 10-year yield, we haven't seen this kind of action since the last meltdown. We have the most inverted yield curve we've ever seen in history. Price distortions across the spectrum of assets like we have never again seen ever, ever, ever. We have so many things that are now coming together in this market and seem very ominous. We have the price of housing here high as it was right before the meltdown. Now, I have said the easiest way, and I came up with this little thing, I don't know, over 10 years ago, how to figure out when an asset is in a bubble. It's very simple. I'll just tell you again because it's a paragraph, okay? When any asset, whatever it might be, the average price of that asset moves above the ability for the average person working an average job, making an average salary to acquire it, that's a bubble. Now, here's 5 things. This is in your inbox right now, okay, if you subscribe to my free newsletter. So let me just cover this real quick, and let me see if this rings true to you. All right, let's have some fun, as I said. So 5 key signs of a housing bubble. 1, rapid and unsustainable price increases, and they're starting to plateau. We saw this recently coming back up a little bit. I think we're plateauing here. Okay. 2, excessive mortgage debt. People are done. 3, rising rates. I think that's kind of in our face. Elevated speculative activity and overbuilding. I think that's pretty obvious. An overall downturn in the economy. So anyone that doesn't see this they're just completely, maybe they're willfully blind, but they're completely blind. We have an epic bubble, and this is deliberate too. You see, you have to understand when a central bank, any central bank, or all of them collectively, because that's what they're doing, keep rates suppressed. I've told you this a million gazillion times. It opens up a doorway for cash to move into the stock market, inflating a monster bubble. It also opens up a doorway for cash to move into real estate, inflating a monster bubble. You get all kinds of malinvestment cash going into things it shouldn't be going into, and coming out of stuff it should be going back into. It's a twisted thing. And this is, again, deliberate. Central banks are driving this, period. So, what we're seeing now is all engineered. It's going to eventually, it's going to change, and it's going to change extremely rapidly and extremely fast too. Now, it looks to me, again, going back to this market today, let's see. You and we cannot, claim victory here just yet. All right. Yes, indeed. It looked like there was a lot of debt buying today. Yes, indeed. The dollar did reverse things. The relative strength of the dollar, stuff you and I have been talking about, would probably happen during the selection cycle of the new president. Keep the delusion, thank you, Greg, of the market going. It's an illusion, it's a delusion, it's whatever it is. And people look at their 401ks, and all these digits on the screen, which aren't actually even there, and they just love it, and they get all wild, and they spray their shorts all over the place. But that's just what it is. Anyway, so I want to hear from you on those five things I just covered. Do you see what I see? I think most of you do. All right, an environment that has gone way beyond, I think, what anyone could possibly have imagined, and gone on longer than anyone can possibly imagine. But we're seeing the side effect of this again: a cratering global economy, surging inflation, food inflation out of control. Just as you and I have spoken about, we knew, you and I, since like I don't know how long now, that food inflation would outpace everything. I think we nailed that one to the wall. Energy inflation, we haven't seen anything yet. Nothing yet with regard to that. So, and of course, everything else that you and I are keeping our eyes on, going pretty much, well, exactly like we expected it to go. And I could imagine, and I would believe this too, that things are going to progress that way as well, as the middle class gets, frankly, absolutely eliminated and exterminated. It's just over. It's just over on a grand scale. Yes, the banking system is sound, Goldstein Lagargo. That's exactly. I'm glad you brought that up, because that's what we've been hearing for the longest time. Let me tell you this real quick. Bank runs are going on right now. All right. You're not allowed to know that. Massive capital outflows from the major institutions, as not just these small regional banks. Okay, the major institutions. What have I been telling you for I don't know how long? Get your cash out. Keep only what you need in there. There's a problem. You never want to be the last person out the door. You want to be first, be smarter, and you certainly don't want to cheat. But according to some, be first, be smarter, or cheat. Margin call. If you haven't seen that movie, you should watch it. But we don't cheat, you and me, right? We don't cheat. We're on the square. We're down the street now, right, Joe? Thank you. Yes, we're all getting it deep in the heart of the gabagool. Absolutely. All right, people. I think we've done it. I think how many of you are surprised? Really, see, this is what I love about this. Are you surprised? How many of you really, honestly, are surprised to find out retail sales are just not making it anymore? That manufacturing here in the United States continues to free fall. That the economy is it's not even a dead man walking anymore. The market, sure, more heroin. The market's been hoping, please, more easy money. Keep rates suppressed longer. Let's make this whole thing a lot worse. That's what this is doing here. Okay. Yeah, I'm shocked. Chet L, I am shocked too. No one's surprised here. No one's surprised because you and I know. I love that because, and I'm telling you, when I see things like, the flash PMI, oh, didn't come in too good. I laugh because you and I knew this. All the economic news, all of it has been miserable and bad. And it seems that the worse off, higher the market wants to go. Tell me how that works. Oh yeah, there's no connection anymore. There's none. The music stopped a while back, Alan. I think we're pretty much on the same page, but the market doesn't realize that this market is so twisted and out of shape, and I don't know. It doesn't make sense at all. Anyway, all right, people. That's pretty much it. I guess we're all watching, and not me. I really don't care what it is, Nvidia. But turn on CNBC. Oh my, what's it doing? Nvidia. You can't make this stuff up. But that's pretty much it. All right, people. Love you a lot from the heart. Thank you all. 500 thumbs up. No, not really. 463. I know we can improve on that. Let's please do that. Let's get that number better. Let's get this video out there. Please comment on these things. What do you think about the housing bubble that you and I have covered since like I don't know how freaking long? Like it's a surprise to you and me that it's a bubble. Duh. Like anything doesn't make sense anymore. Duh. No, that it too. I think you and I have been so ahead of the curve. So ahead of the curve. It's frankly unbelievable. Blue Horseshoe loves NVIDIA? I don't know about that. But maybe we'll talk tomorrow. No, Coco has never set one of his little paws in the CUDA yet. I'm going to be racing the CUDA tomorrow, by the way. I'll keep you on top of it. All right. Love you a lot. I'll see you in the morning. Okay? That's it.